Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for October 13th, 2025. Really a fantastic day in many parts. Peace in the Middle East. Hard to believe, but good step to see Hamas release their hostages. Seeing a lot of countries coming together, that could certainly be bullish if it worked long term. Um, However, even with the day that we saw today, and it was a pretty massive rally, bottoms do not usually form at tops. And I still think there's a question of where do we go from here? We were already concerned. I didn't buy my puts on TQQQ on Friday after the market had dropped. I bought them on Wednesday because I was concerned the market might drop. And a lot of what drove those concerns haven't changed. So, as much as I want to believe the markets are going to rally to new highs and we're going to get into November and December and we're going to go crazy to the upside, don't think it's that easy. And the lack of information from the government doesn't help. The government shutdown typically doesn't cause major issues in the market, but if it goes on forever, it has to be a concern. And as long as one party is going to hold this funding to getting an extension on the healthcare benefits, it's probably going to take some time. So it's going to be interesting to see. So I do think the real question is where do we go from here? Again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group is called Top Down Trader, and my website, which is perennially under construction, is called marketmripro.com. All right. As always, this is education purposes only. Anything I recommend must be taken in the spirit of education and not investment advice. The intent of why I do these videos is to show you how I use my tools for top-down analysis. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And I've got tools in multiple platforms. Today we'll be doing the Market MRI Pro tool. My top-down trader group is a place that like minds can share information, but more importantly, I tell you when I post the videos so you don't miss out on them, as well as doing some top-down trader only educational events and giving you a discount on my tools just for being part of the Top Down Trader group. Palm Beach Gardens meetings is October 26th and 27th. There's been a flurry of people that have added this week, so I'm really pleased with that. I'm looking forward. Probably still a couple spots I could fit in left. 2 packed days of education and software instruction, mostly about the education. The software instruction will be through the delivery of the education. And the reason why you come live is because we spend a lot of time at breaks and stuff making sure everything's working okay and that you don't have any questions that we can't answer. Cost is $12.50. You get fed 5 meals, including one on my boat, weather permitting. Hotel's $155 a night. You get a $400 rebate that you can use on any of the tools whose cost I can control. And if you already have my tools, then I'll give you a rebate towards the meeting next year. Um, and that's about it. So contact me at marketmripro@gmail.com if you got additional questions. Love to have a couple more people live or online. So Tuesday is another day with not a lot of data coming out because of the issue with the government, although we may get some NFB optimism index. But we've got more Fed heads speaking. And right now, you're probably like I am listening to their words to see if we're going to get a 50 basis point cut, if there's any risk that we don't get 2 cuts this year. I think 2 more cuts at 25 basis points, the market's probably okay. 50 sounds great on the surface, and then you wonder what is it they're not telling us. But since they're not getting data either, what is it they don't know? The other thing to remember is earnings season starts in earnest. And you may have had Fastenal today, and Oops, I didn't pay attention to that because I've never owned it. But boy, do we got banks and more things coming tomorrow, technology, just a lot of different things coming out over the next several days as we start the fourth quarter earnings season in earnest. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about, the tools, how I use them, my other tools, just reach out to me at marketmripro@gmail.com. And if you're interested or you have any issue with the software and want some help from Praveen, the developer, coding at marketmripro.com, he'll help you out. So let's take a look. Kind of a not an equal but opposite. Unfortunately, that would have been great. But certainly a strong day, um, no matter how you cut it, slice it, dice it, whatever. So the Russell was up 2.78. Um, the Qs were up 2.12%. Spiders were up 1.53. Diamonds 1.28. The dollar was up. Bitcoin, which is in a rut, was down again 0.59%. And as you can see, volatility was down 7%. Clearly, the market got excited when Trump teased that nothing's going to happen now with China, but we do have a date coming up, a deadline within the next couple of weeks. Now, we know Trump likes to extend them, but there could be some volatility to come. Unlike over the weekend when I showed you that the market ETFs all finished at the bottom of their range, today they finished in the upper part. In fact, they gapped up and didn't really change much the rest of the day, as I'll show you. The new highs minus new lows, negative on the NYSE, barely positive on the NASDAQ. We still got a lot of new lows. We didn't have that before. No shocker if you look at what led today. Rare earth, I think those fallen materials, that was the leader. Let me just rank it the right way, make sure it stays the leader. So let me back that up. Technology, discretionary, and then materials were the leadership today. And the defensive plays of staples, healthcare, REITs, and utilities were the laggards. Even though they were laggards, the only two that were negative was XLV down 0.11 and staples down 0.33. So even the things that were down were not down very much. Now, in a sharp change from the day before, from Friday, or from, yeah, you can see that all the sectors were up compared to none across the board. The majority of the industries were up compared to few, whether you look at those of the S&P 1500, NASDAQ, or NYSE. And that 78% of the stocks were up in the S&P 1500, 69 in the NASDAQ, and 79 in the NYSE. So you can't say anything about today, Monday, the market, that is not bullish. It was a good day. So I'm not trying to be the naysayer. I'm not trying to be doom and gloom. I'm not trying to be Dr. Bear. But I am going to show you things that have me concerned. And remember, as I said a few minutes ago, I bought my puts on the TQQQs on Wednesday. Now, the interesting thing is my TQQQ puts, my diamond puts, and my IWM or TNA puts are all still positive. And I did take some off and put some money in the bank because they were profitable, but I wasn't ready to take them all off. We still got options expiration this week. We got the volatility of the what's still going on in the Middle East, which seems to be doing well. But tariff tantrums, the when are we going to settle this budget issue? A lot of things could still sink the market. If we look at the timing model, the daily did not revert today. Yes, we had a big move across the board, but what we had was inside bars. Now, they certainly could signify a reversal after this pullback, and they may go up to the moon. I don't think so. Um, the spider couldn't get above the 30 daily WMA. Neither could the diamonds, although the Qs and the Russell did okay. The bongos did not flip. So we're still in a model that says It's okay to be long based upon the weekly, which is in a buy. See, everything's in a buy. The bongos are still blue, but be aware that the short term still shows some concerns, even though we had a massive rally today. And going back and looking at the daily charts, we did not, maybe we're more than halfway up on the Russell, but we're in that halfway range on everything else. And I'm still not convinced that we're done going down. Now, I thought this was an interesting picture. Obviously a very strong day today, but regardless of which index you look at, a big gap and traded sideways. Now, spiders traded pretty sideways, the diamonds as well. The Qs maybe trended a little higher, and the IWM certainly did, but you had most of the move was accomplished on the first bar. This was not a gap and go. This was a gap and stay, which is better than a gap and crap. So that might be okay. If we go into the guppy charts, just to comment what I said over the weekend, we've not broken down anywhere. So if you want to be bullish, we've had one bad day that was not enough to get us below the 50 weekly, nor was it enough to flip any of the moving averages. If we look at the US indices, we're going to see the same thing. Now, look, we talked about the 50 being support. Wouldn't it be awesome if we retest and go higher? Then I'll believe we can go on to new highs right away. The 50 held. On the, and you could see we had an inside bar, and as we talked about, up 1.5%. Today on the Qs, inside bar up over 2%. And then on the diamonds, inside bar up 1.28%, and on the Russell up 2.78. Now, a retest of that 50 could still happen. I'd like to get back above the 17 and retest the 17, which would be great. So we're not out of the woods until, in my mind, we clear Thursday's high. Great day today. I'm happy because with my protection on, I'm now positive for these 2 days. Now I've got to start getting rid of some of my protection for the things that don't expire this week anyways, but I'm still think this market could fool us. One of the reasons, let's take a look at the VIX. Why did the VIX not come down much today? Think about it. It opened here, closed here, midway down the bar. I would have been much happier if the VIX came down to here. Now let's go back and look at, maybe this is what's going to happen here, but notice that after this blow off day of bad, the VIX the next day actually traded lower than the low. It's nowhere close. So the VIX is telling me maybe not so fast, Jeff. Maybe not so fast. And what about the dollar? I think the dollar is going to struggle at that 200, and we'll see. And it's really sitting up at that 200. Dollar is up a bit, 0.36. A strong dollar, not good for the markets. Right now, it's far from a strong dollar. It's way off the prior highs. If I look at commodities, markets, this market loves gold. Gold up again, 2.43. Silver up 1.61. Oil struggling below the 50 and the 200. Same with natural gas. And then if we look at I guess it's right here. The 10-year and the 30-year were both up just a tad. Hard to even see them. They're up so little. Let's blow one up. I think it's probably got a shooting star, or not a shooting star, but a top whip. No, unless my data feed is wrong, the 10-year was up 0.12 and really didn't do much the whole day. That's kind of interesting. What happens if we look at it at an hourly chart? Yeah, you can see it may be a data issue. So I'm going to not say anything until I review that. I don't really have another good source for the 10-year and the 30-year. So let's back off on that. I don't know what happened with the 10 and 30-year. Um, one thing on my other computer, if you bear with me a second. Yeah, I don't think this will have the 10-year either. A lot of things like Warden used to have the TNX and the TNY, and they got rid of them. Must have been an additional fee. Volume today was light, down 22% on the NASDAQ and down 19% on the NYSE. That's another thing that should bother you. Heavy, heavy, heavy on the selling, light on the bounce. So that's bothersome. Okay. Let's go look at the buckets. This is why I knew we were close to a bounce, because we were at extreme numbers. We were at 44% on the S&P 1500. That meant 660 stocks were below their Bollinger Bands. Clearly, that is not where you expect it to be, and we knew you'd bounce. Didn't know we'd bounce today, to be honest. On NYSE, you had 19% below. The NASDAQ, you had 24% below. And the Russell 2000, you had 42%. All of those eased off a significant amount today, and that's a good thing. And that's a good thing. It shows neither bullish nor bearish, neither overbought nor oversold, but we were in significant oversold conditions. I'll show you another thing that bothers me. Here's the market breadth tool. So we have cleaned up the NYSE by taking out bonds and things that have an interest rate in their title. That gives us a smaller number of stocks, and it makes us more consistent with what they use in HDSI and Edge Rater, and apparently Q Edge, because we have a similar pattern. What really struck me was how we had three Hindys in a row. Now, today was a great day. Look at this. The NYSE reversed higher, closed above the 50. It's wonderful. We're going to new highs. Not so fast. Put a nice trend line here, and let's see what it does tomorrow, because that Hindenburg bothers me a little bit. And markets don't typically go up following Hindenburgs. They just don't always crash. So, yes, we saw recovery in stocks above the 20, the 50, and the 200. The new high, new lows, surprisingly still negative. AD lines better. Up down volume better on the NASDAQ. You could see the inside day. Everything improved there. These improved. Definitely a better day today. A very, a happy, better day. What about the deeper market breadth? It surprised me. You see improvement in this 13-week new high, new low, but you don't see it turning up despite strong days. You're at 0.15, 0.15. All right, now I don't understand. You are at 0.81. So the NASDAQ still, wait a second, that's not right, is it? No. The NASDAQ's at 0.40 and 0.29 on the Russell 2000. We're closer to a bottoming than we are topping on that signal. So does that mean we're still going to go lower some before we turn it around? It might. Do you see a big turn up in the AD lines because we had a positive day today? If you do, I don't. Yeah, you see a little flinch here on each of these, showing a little bit of strength on the stocks above the major moving averages, but really not a whole lot changed here that makes me think this is over. And then let's see, if we go and we to the ratio charts, we see a opposite of what we saw yesterday, and by that I mean healthcare, which has been strong, and where is healthcare in this one? Right here, gave up a little bit. Communications turned up, tech turned up. Staples came down after a quick rally. Discretionary turned up. So the defensive things came down a little bit, and the more aggressive things turned up a bit. So short term, we've reverted back to growth is in command. And now if we go to the JAS layout and we look at the top-down view, oh my gosh, the difference of one day, now everything is positive, led by basic materials, tech, and energy. That's interesting because energy wasn't great on the S&P 500. But I'm not looking at 500 stocks, I'm looking probably at 3,800 stocks. So that's interesting. Now, sometimes I'll rank it by percent. Sometimes I'll just look at this 2-day momentum signal here, and I get basic materials, utilities, and industrials. But boy, I hate not having tech, but let's just look at those three. And then if we look at those three and we look at the best performing by percent change, or let's just look at that FM2 again, the 2-day momentum, and see what was working the best. All right, this is an anomaly of our data vendor. It's probably something, but probably not a lot. So those are stocks that came out of their industry group and have to be put back in. 2, 3, 4, 5, 6, 7, 8, 9, 10. So what we've got are the 10 leading industry groups in the top three sectors, 237 stocks. Let's put a couple of filters on them. Let's put 5 and 500K. And now I got 143 stocks. And let's do that same 2-day momentum ranker. Let's just look at these for a second. STI, big breakout. Don't know anything about it, so I could come over here and read the news. Buyer beware. Well, not the kind of thing that I'm going to go buy without reading that. This is one I like, and this is one that I think was probably the stock to buy today. The question is, has it gone too far? This is GE Vernova. That's been sort of sitting here on the 50-day moving average. I think it looks great here. The only downside is when does earnings come out? Earnings come out on the 22nd. Here's what I like about it. $1.78 can be compared to 35 cents. 915 million in sales to 891. There's a lot of earnings per share growth there, and that might be enough to propel this thing much higher. So I like GEV here, and I always get nervous on on earnings. There's no seasonality in something that was spun off within the last couple of years, so I can't comment on that. You look at the chart down here, you got the breakout of the trend. Your volume is good on a low volume day. CPR, volume breakup momentum out of a squeeze. Look how the relative strength has turned up and the OBV, and high jump doesn't show because it's a recent spin out. I think GEV looks great. All right, next one down, ELBM, no idea. Electric battery materials, obviously it's a hot group, don't know anything about it. MP, yeah, I mean, we looked at this over the weekend. I just don't know when this thing's too expensive. This is the first one that the government was buying into, and that caused some of this movement up here. I've got a position in this in my longer term accounts. As rare earth metals become the next battleground, you had 2 big days of volume, CPR volume, gap, double momentum. You know what I think about that? That's my favorite buy signal. MP, problem is it's really getting extended. You can see it's at 100%. Another extended leader is Bloom. Man, it's almost the same darn pattern. Bloom, big breakout. I mean, I don't know how you buy this up here unless you're just buying it on hope and prayers and not, I mean, I guess it's not too high. It's only 70, no, it's 100%. It's tough for me to buy something that's this extended, but you know it's going to go higher. They keep announcing different deals. Today they announced a deal with Brookfield Asset Management on some investment. AC, another rare earth metal stock. Aklo, God, here's one where I owned it from like 30 to 85, and I said, man, this thing's getting too expensive. Kind of wish I didn't sell it because it's double since there. Now, would I be buying it up here? Um, it's not, you're not buying it because you got great earnings. Um, You're buying it because if we're going to meet all the giga power needs, we need like 30 more nuclear reactors. Oklo's involved in the design, building, and maintenance of nuclear reactors. So obviously it's going to do great, but it's in rarefied air. GWH ESS Tech. I wonder if that's right. There you go. Long energy storage plot. So all of a sudden, when you see big earnings, think data centers and think bull run. CHNR, China Natural Resources, which I believe is a coal play, among other things. NVA, Nova Minerals Limited, another rare earth play, perhaps. GTI, don't know anything about this, but you can always look in the news. Getting a letter from the NASDAQ is not usually a good thing. You can look at the fundamentals. Things that are new likely don't have any fundamentals. So this is one way to look at the market. And I'll show you a couple other things I like to do. Let's take the same list. Let's go in here and let's add pullback and uptrend. Right here, hit OK. Now let's rank it by U. Stands for the number up momentum indicators or impulse indicators. So lithium Argentina, another rare earth or battery dependent mineral provider. Um, China Natural Resources, can you buy this thing here? Like many of the others, the stock is getting extended, but boy, on massive volume, did it have earnings today? Don't have earnings on it. All right, here's Bloom Energy again. STI, Rio, ore, gold, silver, all kinds of minerals. It's like it's breaking out here. I mean, these things are being driven by a lot of a need. MP, GTI, we looked at Alva, we looked at another energy producer that I like is VST. It's a utility, and again, like GEV, it's sitting in the perfect spot. It's not overly extended. It had a breakout and a momentum signal. So that's how I like to break down from a top-down perspective. Another thing I'll do is I'll go into just the JAS, make sure I'm in the JAS, which is the default. Go to my impulse list, and you can see I have the filters on. We take the filters off. 3,861 stocks made the filter, and I'm looking at $5, 500,000 shares, excuse me, $1, 100,000 shares to make it this list, and you got to be in the NASDAQ, NYSE, or the Amex. So there's a lot of different things that I can do from this view, but I've created two trading systems for you. One is called the A plus system. I am looking for in the A plus system, pull up a stock, and I actually took this one today, ASPI. It's in the uranium story. Um, and I am looking for stocks that have the double blue above the squeeze line. And those double blues are a big momentum signal where most of my big winners have come from. Now, going against this trade and why I did one of my favorite spreads that was low cost and low risk with some decent upside is that it's very extended. Um, and we'll have to see where it goes. Look at the massive volume that came in. Volume gap up today and momentum double. GWAV, Greenwave Technology. I don't know if this was a battery thing. Let me see. Yeah, I don't like two words. Delinquency notice and reverse splits. It sort of takes it out of my consideration. There's our MP metals, which, except for the fact it's so extended, is just beautiful. Now that's one of mine. So again, it's requiring a price and volume filter, which is probably 3 and 500. It's requiring the relative strength to be above the moving average, the OBV to be above. Here again, the high jump's a little bit high for my taste. That was one of them, and that's been one of my go-to scans that I just created one simple button. The other one I like a lot is the A. Now the A goes back to my history of stocks in an uptrend that pull back to support, that break out with some kind of momentum or something signal. Pull back to support and a breakout, you could see all the blue dots. So that was Broadcom today. We've got quite a few. Just let's look at a couple of them. AMSC. We've been looking at this, looking for it to break out convincingly. This is in the solar complex. Broadcom signed a deal with OpenAI. It seems like everybody is, but not me. And a big breakout on Broadcom today. BEAG, don't know anything. Bold Eagle Acquisition sounds like a SPAC. BlackRock held at the 50 and had a nice move up today. Burlington Coat Factory, kind of sloppy looking. Calumet, this is I believe it's a refiner. We'll know that if it pays a dividend. Huh, no dividend. I thought this was. Maybe it's not. Specialty and renewable segments. I still think renewable fuels market. I think it is a refiner. Um, any of these news reports, you just click on it, it'll pop up in your browser, and you're welcome to read it for free. Um, fundamentals are not great. CX, CEMEX, big uptrend, pull back to the 50 and a breakout. Relative strength above the moving average. Now, I'll talk a lot about my live meeting about how I visualize relative strength. And there is an IBD, relative strength. How do you compare it to the rest of the stocks in the market? I like that one a lot. There's a Wilder RSI, which I use in the Bongo, 3 different lengths. Um, there's the RSI index that we look at for overbought and oversold. But what we're doing here is we're calculating the relative strength of the entity versus the spider. And we want things that are going up, which means stronger than the spider. And you select the moving average, and I look for the crossover. So CEMEX pullback breakout, cheap stock, looks pretty darn good to me. And it actually pays a dividend over 2.6%. Delta had good earnings last week, failed breakout. We'll see what happens. Dick's Sporting Goods. I'm looking for something that's moved. Flex has been in a nice uptrend. GPRE is, to me, it's a refiner again, using both grain alcohol, I think is, or yeah, corn, ethanol, whatever, I think is what drives it. Now, it pays a teeny weeny dividend. Obviously, not a big growth stock. G Wave, we looked at before. Manu, if you want to own a soccer team. MP made this one as well. MTEX, Mantech, Myriad Genetics. This has been a great um, play. Cloudflare, NET running right up the 50. NVRI pulling back, not a big move up. PHAT, PRM, which looked good here, didn't hold. Looks like it's breaking out again. It's going to have 64 cents versus a loss of 61. I took the trade in this on this false breakout because of that fundamental improvement. Signet, jewelry manufacturer, nice steady uptrend, a little bit of a pullback. Skechers, nope, Skeena Resources. $20 stock, pullback and uptrend and breaking out. That's what we're looking for. STM, ST Electronics, kind of doing nothing. TEL, TE Connectivity, pulling back. Look like the market with an inside bar there. YAV, VIAV Solutions, not that exciting. Veristem, now it's funny, I talked about this stock when it was $4 or $5 and I thought it was undervalued. And now I'm looking at it, it's gone up to 9. Um, it's in a squeeze. It pulled down to the 50, had a breakout of the momentum and a CPR, and relative strength turned up. I still think Veristem looks good. Wheats, Wheaton, Precious Metals. This guy was on CNBC, I think today, this morning, pulled back to the 50, and then a big gap up from a squeeze, and then Yelp. So they're not all great. I'd rather buy above the 200, not down here. But one thing you could do is take this and then add that it's near the 50-day moving average. So let's find the 50-day moving average support. Hit OK, the list gets much smaller. And you've got CX, which may be my favorite looking chart here, and .NET, which I think, Cloudflare, which is also looks pretty good. So GEV is probably the one I like the best. I like both of these. I hope you have a great day on Tuesday. Right now, the futures, I've looked at them a couple times, really aren't not doing much. They're relatively flat. Um, Now they're up a little bit, but they're not up a lot. Bitcoin's still down. I think today was a massive day. Friday was a massive day. That VIX is worrisome. And sometimes the market's just going to go sideways a little bit and consolidate. I'm kind of looking for that here. Have a great day in the market. I'll be with you tomorrow night. Warning, warning, Will Robinson. I've got another medical meeting to go to in Europe that I'm presenting some of my data at. So I will be out of the country starting Wednesday night. Um, that means, and I'm not back for a week, but I don't get back to Florida for longer than that because I got a paper to present in New York. So there is a good chance I'm not going to be very timely or doing videos every night. The good news is for those coming to the meeting, it's going to give me some chance to create some new material, which is my goal. So if I see something major, I'll always drop a note in Top Down Trader. Whenever I say I'm not going to have a chance to do the videos, I end up doing them, but I just have a feeling that I'm not going to have as much time as I'd like. So I'll talk to you when I can. I still think we need to be careful. And even with a massive bounce that we saw today, I remember the 3 words I learned from Ian: heed the Hindi.